Hello and welcome. This is Enda here from bullwaves.org, and this is the weekend update. I thought I'd start this weekend by just showing you what I do on a nightly basis. This is an example of a nightly update. This is from last night, so the 13th of May. I usually start by, giving a greeting, and then I usually throw in some links or some charts that I've seen throughout the day that are interesting, or articles, or videos that I've seen that are interesting. And then I dive into the markets. I start with the large chart, that's the hourly chart. Beneath that, I always show the 4-hour and the daily to just kind of give you an idea of where the shorter term chart sits within the larger pattern. So you always know where you kind of stand within the larger patterns. And then I give 10 or 15 lines on how I think the day has gone and where I think tomorrow will go. So that's kind of so we'll wrap up the week on this one, and I'll give you an idea of where I think Monday's trade will go. You see, so I go through, the currencies. There's pound dollar and the update, and there's dollar yen and the update, and there's Dow Jones and the update, and then gold. We go right through the gamut. Crude oil, S&P, silver. And that's the commentary that I give. And then I always tag on, I think I have 4 extra sets of charts that I tag on just for kind of, let's say, background noise. Let's say. So I always have Bitcoin, FTSE, the DAX, and the Nasdaq then. Interesting enough, here's a chart these are the longer term charts that I had on Bitcoin. I can't remember when I published this. At the top, I was tracking 3 waves up in wave 4 and expecting wave 5 down, and what did we get? A huge decline in wave 5. This is even further back here, where we were tracking the B wave top way back when. I can't remember what that was. Last year sometime. Now we were expecting a C wave decline, and we got this massive decline, which continues to this day. Anyway, so you can see how the short-term chart kind of fits within the larger term pattern. Okay, so I just thought I'd kind of start with the nightly product that I do. This is the nightly Elliott wave analysis that you receive if you join the website, and I would invite you to go and do that. Okay, all right, let's get on with the charts of the day, move on, and I'll give you a review of the week and where I think next week's going. So, right, here we go. Here is the weekly chart of euro dollar. Just a quick recap, if you didn't see on the nightly update there, but this is what I'm expecting. We've got an A wave up off the 2016 low, severe rally in wave A. We've got 3 waves down in wave B. We're coming back into the low of the previous 2016 lows, so that's 103.35 or so, or 103.40, I think it is. I'm not sure whether we get a break of that now or we just rally off this point. It kind of doesn't really matter. It's still 3 waves down. If we get a break of that, it changes this pattern into an expanded flat. So we get an A up, 3 waves down in wave B, and then we get a rally back out above the wave A top in wave C. So I still prefer the idea of a rally in wave C coming our way. I just think right now it's going to be longer and probably more intense. We're talking about probably 22 or 2300 points here over the next 6 months, 8 months, however long it'll go. Okay, that's the weekly chart. Here's the 4-hour chart. We're just tracking this final move down in wave B, and here is the hourly chart. This is wave 5 of wave C of wave B. So that final C wave down, this is wave 5 of that C wave, and this is the 5th wave of that 5th wave. And you can see out of a triangle, this triangle kind of morphed throughout the week. It was pretty hard to track, to be honest. But anyway, we ended up with a triangle in a wave 4, and we now moved lower in 5 waves. So we've got wave 5 down of 5 of C of B. There's that long-term low there, that 103.40 low. So far we've held above that. I don't know whether we break it or not. If we do, all the better. If we do break it, it doesn't really change things other than the pattern becomes an expanded flat. If we don't, all the better. We just rally back out into wave 1. I'm looking at that wave 4 high. That's 105.93. That's where I'm looking at next week. Okay, let's get on. This is the 4-hour count in cable. So you could view this in a couple of different ways. I think on the hourly chart I have, no I don't. Okay, I'm looking at this as a fifth wave decline of wave 3. So I'm expecting a fourth wave rally to come our way pretty soon. Whether it starts this week or not, this week coming, I think in the longer term that's where we're going anyway. So we're probably going to push back up towards 127, that area, before declining in a fifth wave to complete wave 3. The overall view. So here we go. If we're expecting a fourth wave rally, then it'll be an ABC rally. So this is wave A up is what I'm looking at. We do have again a fourth wave correction, 5 waves down out of that correction, and a small spike rally on Friday. We don't know no idea whether that'll will result in a breakout in wave A of A, but we'll see. That's where I'm looking next week. Again, hunting for that low and an initial impulsive rally in wave A. So let's see how that goes. Here's dollar yen. We got a decline this week. Not quite sure so far. It's promising, but we're not conclusively, let's say, turned off the top just yet. And I'm going to explain that to you now. This is the fifth wave rally that we've been tracking. So that's a wave 1 top, and expecting longer term, or medium term anyway, a 3-wave decline in wave 2, probably back towards about 114 or 110 or that kind of area over the next while. Here's the hourly count. You can still track this as a 5-wave rally continuing. It could be a series of 1-2s also. It could be wave 1, 2, wave 1 and 2, and then a third wave decline. But so far we only have 3 waves down, and that's, for me, is a slight concern. I would like to see a complete 5 waves down before kind of committing to, let's say, the idea that we have a firm top in place here. But I do like the idea that we had a series of corrections, spike high, correction, spike high, and then a rollover, and we almost got a retracement back below that previous fourth wave low there. So 126.90 seems to be a pretty important level in terms of a reversal pattern, because I'd like to see a break of that 126.90 with 5 waves down in order to call that reversal pattern in play. Okay, but that's where I'm looking at. We'll see whether that gets fulfilled next week. Okay, here is the Dow, the daily count. We've still got, overall we have 3 waves down, but I am, let's say, increasingly of the opinion that that we have topped here. I think the general malaise, even though we have kind of spiked, or we've rallied quite impulsively to the downside. Granted, we only have 3 waves down in place just yet, but the fact that the general kind of malaise, even though you hear talk of recession, but there's no talk of market crash. People are still quite complacent. There is volatility levels have not spiked as you might expect, but I don't expect that to happen until we get a third wave down. So until we get like a solid, let's say, decline back into the mid-20s, then we'll get the big vol spikes that you might expect. So far, we're just kind of carving our way lower off the top. People don't believe it yet, but they will believe it when that third wave down strikes. Okay, so here's what I'm working with right now. We've got a wave 1 down, a running flat correction, wave 2, and then a series of 1-2s off that. So I think we're getting clearing rally right now. A bit suspicious throughout this week whether that would happen, and it seems to have kind of manifested itself right now anyway. So it looks like we've got a 1-2-1, and we're clearing ourselves right now in wave 2. So the clearing rally in wave 2 green was quite short. It was sharp, short, and completed pretty much at 50%. So I'm expecting the same way here. Same thing. We've got wave 1 down. We should get a sharp, short 3-wave rally, and back towards that 50% retracement level. Here's the hourly count. So we're looking at about 32,600. That's the 50% retracement of wave 1 down. So ABC up, break at 32,600, and then we should capitulate down into wave 3 of 3. And that's the, let's say, the outlook over the next week or so. So I'd say if this count is correct, by the end of next week, we should be beginning our trek lower down into part of a third decline. Okay. Here is gold. It's the 4-hour count in gold. I think we are so close to that low, that bottom forming in wave 2 here. Forgive me for the moment. I have a lower degree labeling on the hourly count as compared to, let's say, the 4-hour count here. But it doesn't matter in terms of the actual pattern, because the pattern is the same. No matter what way you slice it. We have come down in 3 waves, as I have been expecting for a long time, ever since that top back in March, expecting 3 waves down. We topped out in mid-April, and I was expecting that C wave down to target the 1850 level. We got that 1850 level, then we looked at the 1818 level, and I'll go to the hourly count here. The 1818 level is where wave A equals wave C. We spiked lower, broke through that this week, and we seem to have filled a channel now in wave 5. Wave C. We've got wave 1 and 2, wave 3, 4, and now wave 5 complete. We've filled out that channel, so we've got wave C showing all the signs that we are done here. The only caveat I have here is that we must hold above 1780 in the short term for this particular version of the count to remain valid. If we break 1780, I can revert back to another version of this wave 1 rally. So we can actually start the wave 1 rally back here in 1751. We can go wave 1 and then an ABC, wave 2, and then 3, triangle wave 4, and then 5. It's an alternate view on this wave 1 rally, which will allow for declines below 1780 but above 1750. So I would like to see 1780 hold, and then we rally again to begin wave 3 up. So if this count is correct, then we're on the verge of something pretty explosive in gold. On the short term, I'd like to see 1780 hold next week, a nice impulsive higher low build above this 1799 low. So that's the idea for gold. We'll see how it happens or how it goes. Join the nightly updates and you'll see every night. Okay, here is crude oil. We are, how would you say, tentatively looking towards that C wave rally as a complex correction right now. So I'm not entirely sure. Let's say the action is not, conclusively favorable towards any particular count at the moment. We seem to be drifting sideways over the last 2 months, basically. This could be a triangle. It could be a B wave triangle. I mean, this could be wave A down. This could be A, B, C, D, E, a B wave triangle. Then we capitulate in wave C. This could be wave 1, and this could be all part of a second wave correction higher. That's what I'm kind of going with at the moment. And you'll see on the hourly count here where that stands right now. So it looks like we've got a B wave low in at about 92.50. And then we've got an ABC up in wave C. That's what I'm working with right now. Seems to be fitting the bill so far. There is an alternate count here that's kind of lurking in the background here. But if we get a break of 110.40, that rules this alternate count out. A break of 110.40 is what I'm looking for on Monday. Confirm wave 3 of C, and then we can continue probably up towards that 116 level to complete wave 2, and then if all goes to plan, wave 2 will be done by the end of next week, and we can concentrate to the downside again, wave 3. Okay, let's move on. What have we got next? S&P. Here's the 4-hour S&P. Slightly different count in the S&P. Here's a 4-hour. We got wave 1 down, and expanded flat wave 2, and now a solid decline again. This is either wave 3 or this is wave 1 of 3. So at the moment, I'm working with the idea that this is wave 1 of wave 3, and we've got 5 waves internally there. We've got wave 1, 2, 3, 4, and 5. We've got a nice reversal rally off that low. So it seems we've put in a reasonably, how would you say, a reasonably important low at wave 1 at 38.59, so 38.60 there. Looking for a 3-wave rally in wave 2 now, up to about the 42.50 level. So we've got that 50% retracement there. ABC up, 42.50 is the kind of initial target area that I'm looking at. And then probably by the end of next week or the middle of next week, depending on how long this second wave rally stays in force, we should have another bearish impulse wave in place, and then we look for a third decline down into wave 3, and that is where I think recognition will come on the broader sense that we're heading towards recession, we're heading deep into a bear market, and we could kiss goodbye any sort of let's say cash on the sidelines or buy the dip kind of talk. Once this happens, or if it happens, it'll be in no uncertain terms that we are in a serious bear market, and I think this one could go a long way. But let's look for this second wave correction first, and then I think this will provide a nice bit of relief. We'll probably clear out a lot of, let's say, the shorts that have been built. We might balance the market a bit again. It'll just be a corrective rally, and then we decline into a third. So that's let's say what I'm expecting over the next week or so, and we shall see whether it happens or not. And that's the fun and joy of it all, isn't it? Okay, here's silver. If you've been following these videos, that back in March I was labeling this as a B wave high, and I was expecting a large C wave decline. Boy, did we get that large C wave decline. We got an initial 1-2 lower high, bearish lower high, and then we have completely capitulated over the last 2 weeks down into a third wave. Possibly complete in this third wave right now. Depends on how you look at it. On the short term, you can view this as wave 3 done or wave 3 of 3 done. So depending on which, how bearish you want to be on silver. If we're holding a little bit conservative here, then we'll probably say that wave 3 in red is done, wave 3 of C is done, and we'll track higher now in a correction in wave 4 of C, and then we'll capitulate again in wave 5 of C. I'm still looking at that kind of $19, 18 to 19 range, complete this C wave and wave 2. And if you go to the daily count here, you can see that wave C and 2 are, that's kind of, that is pointing towards the 18 to 19 level to complete. So 5 waves down in wave C, that's where I'm looking. We'll probably get some sort of relief rally this week, some sort of correction. Maybe it'll only be a consolidation around that $21 level, and then we'll fall out of again into wave 5 of C. But that's the outlook for the next week or so. Let's see if we track higher in a 4th wave and then we fall down in a 5th wave. That's the base case scenario right now. Okay, let's move on. We'll see what Bitcoin's doing. So again, it's pretty much tracking the market. Like at this point, it's all one market. That's kind of my idea here. You can see earlier on, this is the chart that I showed you earlier. Back in November last year, I was tracking this B wave high. That was 3 waves up in wave B, and we were expecting this long-term decline in wave C. And boy, it has not disappointed at all. We've broken to a new low. This will be, we're holding, well, this week we broke to a 18-month low or more. We touched back below the 30,000 level, so 25,500. And I don't think this final 5th wave is done just yet. So on the 4-hour count, I think we're tracking 5 waves down in wave 5 of C. Now let's get rid of you. And we'll probably, consolidate around that 28,000 level in wave 4, and then fall again in wave 5 over the following week. So this week we'll probably see some sort of consolidation, 4th wave, and then we drop into a 5th wave. On the hourly count, you can see, still split between which degree this is actually operating in. much like silver, actually. So it's interesting how Bitcoin and silver are actually tracking each other step by step here. We had a nice relief rally off the low. So that low came in at 25,350. This could be all of wave a lower degree wave 4 done, or else we've just completed wave A of this wave 4 in red. So it could be wave A, B, C happening, or else this wave 4 is already done and we're going to move lower again in wave 5 immediately. But suffice to say, I think we have a previous fourth wave about 31,800. So let's see if we get. We'll decide on which of these counts is actually correct next week. The longer this correction goes on, the more likely that it's going to be this higher degree wave 4 correction that's going. I still say that we're going to see another decline, probably back below 20,000 before this whole correction phase is done in Bitcoin, and maybe even lower than that. Okay, because if we do actually hit a major bear market, like if the this is the speculative part of the financial markets, the ultra speculative part of the financial markets, and this has completely broken. So once the actual nuts and bolts of the financial markets, like that being the stock and bond market, once those begin to completely roll over, then these speculative edges of the market will be obliterated, I think, and we may even go back into that low 1,000 range, back towards 3,000 again. Don't rule it out. That's all I'm saying here. Okay, so let's move on. Let's see what the Nasdaq is doing this week. You can see that I've been tracking this 1-2 pattern. We got 5 waves down in wave 1, ABC up in wave 2, and we have rolled over into wave 3. So again, you could say that the Nasdaq 100 might be like towards the speculative edge of the financial markets, especially when you figure how many of the Nasdaq 100 would be loss making or pure, let's say, growth plays. So the growth play is done, it seems. We have got a bounce at the end of this week. I don't know if this is, I don't know what degree this correction higher is just yet. At the moment, I'm still taking, let's say, the most bearish aspect of this count, and I think that this is probably most likely that we've got a fourth wave within wave 3, so we've got another step lower in wave 3. And that'll only be wave 3 of 3 complete, so we'll still have another step lower, complete that larger wave 3. So we could still be, stepping to the downside here for the foreseeable future. Next week in general is going to be, I think, a corrective week in the market, and that will probably create some sort of consolidation within a few different markets. So, I'm not going screaming with my hair on fire just yet, but I think we could be building for an even larger decline, and that's my base case scenario. You can laugh at me if you want. Now, that is that done. I think it's time to move on to the good news. I'm giving you the trouble news of your financial future and your economic future. It's going into the bin. I say with a smile on my face. I'm not wishing this on anybody, but we have topped out in a major cycle here, and if I'm right on that one, then things, all sorts of froth will be completely washed out of the market. There will be opportunities ahead, but it won't be anytime soon. Okay, so I've given you the bad news. Here's the good news. Read it and weep. ABCs of salvation, and I leave you on this note that even some of you watching this video I may not be able to speak to again, because either I will have shuffled off the mortal coil or you will. So I would advise you to get good with God before you do that, and this is how you do it, through his son Jesus. Okay? And I know I've lost most people there, but at this point it's time to say goodbye. Have a nice weekend. And if you join the website, I'll see you on Monday evening. If not, I'll see you in YouTube land next Friday or Saturday. God bless. Godspeed. Bye-bye.